Have you ever seen a stock chart that just seems to defy gravity? Well, that's exactly what we're looking at today with the stock ticker ARBK. We're going to dive deep into the technical signals behind its incredible surge and really decode the intense battle raging between the bulls and the bears.
First off, just get a load of that jump. In one single day, RBK shot up from about 42 cents to over 81 cents. It nearly doubled in value. That's the kind of move that makes everyone sit up and pay attention. But the price itself? That's only half the story.
And behind that incredible price jump was a truly staggering amount of activity. Get this, over 285 million shares changed hands. This wasn't some quiet, sleepy move. No way. This was a massive, roaring surge of investor interest, and that suggests some serious conviction.
So, this brings us to the big question for today. When you see a move this dramatic, what is the story the charts are trying to tell us? Is this the beginning of something even bigger? Or is it a classic case of things going way too far, way too fast? Let's dig in and find out.
All right, let's start by making the case for the bulls. What are the indicators telling us that this rally has the strength to keep on running? We're going to unpack all the signals that are pointing towards even more potential gains.
This huge spike didn't just come out of nowhere. It's actually the exclamation point on a steady, sustained 3-month climb. The stock has been building this upward trend for a while now, and that gives this latest move some really important context.
And this is textbook bullish stuff right here. The price is trading above every single key moving average, from the super short-term 5-day all the way out to the long-term 200-day. When they all line up like this, it is a powerful sign of broad strength across all time frames.
Now, to dig a little deeper into that momentum, we've got to talk about an indicator called the MACD. Don't let the name scare you. Really, it's just a tool that helps us check the pulse of a trend. Is that trend getting stronger, or is it starting to get weaker? The MACD helps us figure that out. So what's the MACD telling us about ARBK? Well, it's not just positive, which is good on its own. The analysis shows that the bullish momentum behind this incredible price rise is actually still accelerating. The bulls aren't just winning the fight, they're pressing their advantage and hitting the accelerator. And if you needed one more piece of bullish evidence, check out the Arun oscillator. This indicator is all about trend strength, and a reading this high, nearly 93 out of 100, is just screaming that this is a powerful, undeniable uptrend. Okay, so the bullish case looks pretty rock solid, right? Well, not so fast. That is not the whole picture. Let's flip the coin and look at the other side of the argument, because the charts are also flashing some pretty big, bright warning signs that this stock might be getting, well, overheated. To really get these warnings, we need to know about the RSI, or the Relative Strength Index. Think of it like the tachometer in a car. It doesn't just measure momentum, it measures the speed and intensity of that momentum to tell us if the engine is revving way too high, deep into that overbought red zone.
And ARBK's RSI? Oh yeah, it is screaming. A reading over 70 is normally when you start to worry about a stock being overbought. ARBK's is sitting at a whopping 88.5. That is a major red flag that this buying frenzy might have pushed the price up way too quickly to be sustainable.
We've got another warning light coming from the Bollinger Bands. These basically measure volatility and create a price channel where a stock normally likes to trade. Well, ARBK has blown right past the top of that channel, which is another classic sign that this move has become seriously overextended.
So here it is, the heart of the matter. You've got this fundamental conflict. On one side, the MACD is telling you that the bullish force is actually still building. But on the other side, you've got indicators like the RSI and the Money Flow Index, the MFI, that are both basically shouting that the stock is severely overbought and really vulnerable to a sharp reversal. It is a true technical tug of war.
And the final piece of evidence for the bears, it comes from pure statistics. The linear regression analysis, which tries to find the best fit trend line over time, is showing that the current price is way, way above where it should be based on its recent history. This huge gap is yet another sign that the current price is stretched to its absolute limit.
So you have this intense conflict between powerful bullish momentum and these severe overbought conditions. Given this tug of war, where on earth could ARBK possibly go from here? Well, the analysis really lays out 3 potential scenarios.
So what could happen? First, the bullish path. Momentum just wins, steamrolling everything and pushing the price even higher. Second is the bearish path. Those overbought signals finally kick in and trigger a pullback. And third is the neutral scenario. The bulls and bears fight to a standstill, and the stock just chops around sideways in a volatile range.
For the bulls, this is the number to watch, 95 cents. That represents the next major resistance level, the next ceiling. If they can punch through that, it could open the door for even higher prices.
And for the bears, this is the critical level, just under 31 cents. This is a significant support level, a floor, where buyers might be expected to step back in. And just notice how wide that potential range is. It tells you everything you need to know about the massive volatility at play here.
So, with all these conflicting signals and these huge potential price swings, what is the final takeaway? How do we synthesize all this data into one coherent view?
So here's the final weigh-in. In the bullish corner, you have a strong upward trend, prices above all the key moving averages, growing MACD momentum, and just massive volume. But in the bearish corner, you have an extreme RSI, the price is outside its Bollinger Band, a maxed-out MFI, and it's far above its statistical trend. It's a true clash of the titans.
The key strategic insight here is that when momentum and overbought signals clash this hard, volatility is pretty much a given. So the analysis suggests a cautious approach. For anyone already holding the stock, it might be smart to lock in some of those incredible gains. And for anyone thinking about getting in, it suggests patience, maybe waiting for a better entry point after a potential dip.
And that leaves us with this final question, doesn't it? When the technicals are pulled so tightly in opposite directions, what are you really looking at? Is this a rocket ship just refueling before its next massive leg up? Or is it a firework in its absolute brightest moment just before it fades? The answer is going to unfold in the charts to come.